The Federal Reserve is raising interest rates, and that's leaving many worried about the impact on our wallets. Stuart Fields from Open Air Advisors is here to share what this interest rate hike means for consumers. Thanks for joining us.
Thank you, Chloe. Glad to be here.
I'm glad that you're here. And it's Cleo, by the way. How
Cleo.
much, no worries, no worries. How much of an increase did the Federal Reserve make?
Yes, recently they raised rates by 1/4%, and they actually announced for the rest of 2022 probably 6 more rate hikes to come.
Oh,
So they
no.
looked forward, yes, they looked forward to 2023, and we're looking at about 3 more hikes with no more hikes in 2024. So this is actually the first time they've raised rates in about 3 years.
Stuart, can you explain why did the Federal Reserve raise the rates?
Well, it's actually kind of funny saying this. They're raising rates to actually slow down the economy. So why in the world would they want to do that? Well, if we look around us, inflation is approaching almost 7%, and the Federal Reserve has a target of 2%. So that's a big difference. We're well over that 2% threshold. So by raising rates, this actually increases the cost of borrowing to consumers and to business owners. So they're going to be more reluctant to take on debt. So that should theoretically slow down the economy. And if you look at our massive balance sheets, the federal government has toppled $30 trillion for the first time ever. So again, they think the conditions have been met to raise rates because of 7% inflation and a strong labor market.
As a consumer, this doesn't sound too good, Stuart. I guess you explained why we're seeing the raise, but what kind of impact do rate hikes have on consumers? Could this affect stuff like mortgage rates?
Absolutely. Not only is Dallas one of the hottest markets in the country as far as
Mm-hmm.
getting a home goes, but rates are on the move. Rates right now at a 52-week high on the 30-year mortgage, about 4.5%. Just a couple of weeks ago, that was 4.1%. So the cost of borrowing a home has definitely increased. So I definitely recommend you go to our website, openairadvisors.com. We have a calculator on there. It'll definitely help you answer those questions to see how much home can you afford in this rising interest rate market.
Right, that makes sense. So what are you telling your clients so they don't panic?
Well, first of all, savings are not keeping up with inflation. Right now, if we look at the largest retailers, the average savings account is about 0.06%. So you would think if they're raising rates that our savings rates would increase. That's just not the case. So again, people who are approaching retirement, that are inside of retirement, they want low risk strategies. And right now, savings accounts and CDs, that's hard to keep up with inflation. So if you have concerns about your savings accounts not keeping up with inflation, this is a good time to reach out to a financial professional so they can guide you on how to make those financial decisions going
Right, you
forward.
might need that help. Stuart, before we go here, I guess what is a good financial strategy and where do we start? Do you recommend reaching out to that professional?
Absolutely. Every case is a little bit different. Your tax situation, how much income you need, how much money you've saved is a little bit different for each person that we met with. So I would definitely reach out to your financial advisor, find one so you can go through that process because what you did 5, 10 years ago definitely isn't the approach to go in this rising interest rate environment we're seeing for the next probably 3 to 5 years.
Stuart Fields from Open Air Advisors. Stuart, thank you for joining us. Great insight.
Awesome. Thanks.
Have a great day.